All right, guys, I was just taking a look at my results for SPY, how I've been trading SPY in my Robinhood portfolio. And let me tell you something, I've been extremely profitable selling SPY options, as well as just generally trading SPY. It's one of the most predictable things to trade. It's one of the safest ETFs, has amazing volume. And in today's video, I'm going to talk about why you can technically just trade SPY. You don't really need any single stocks. You don't really need anything else. You can just trade SPY and make consistent income, whether that's $5,000 a month, $10,000 a month, or even more just trading SPY. So let me talk about high level what SPY is real quick. It's basically an ETF that has 500 of the biggest companies in the United States. So that includes Goldman Sachs, that includes Apple, Amazon, Google, Microsoft. It includes Caterpillar, it includes some healthcare companies like Johnson & Johnson. It basically includes everything. So you don't actually need that much diversification in your portfolio or any at all if you just have SPY. So the simplest SPY strategy that you can sell, actually, I'm going to talk about multiple. I'm going to talk about zero DTE trading. I'm going to talk about covered calls on SPY, selling puts on SPY. And I'm going to show you the mechanics of how to actually go about SPY trading to make a consistent income. And really the most important thing is not to lose money, because SPY is the safest. If you trade single stocks, they have a lot more volatility. Whereas SPY, there really isn't a whole lot of volatility. Now, sure, the markets do go down, but in the long term, it's very hard to lose money on SPY. It's practically impossible over a long enough time horizon, 2 years, 3 years, to lose money. And many of my retirees, the students that I work with, they're just trading SPY and QQQ. By the way, SPY and QQQ are both very similar, just QQQ has a bigger focus on technology companies, rather SPY has a little bit more variety. All right, I'm gonna show you what SPY, one of my favorite strategies, is right now. Now, I'm going to show you a small account strategy, a medium account strategy, and a large account strategy in this video. So you're truly in for the best SPY video, hands down. So if you're not subscribed, you're totally missing out. Comment down below. Uncle Henry hitting us with the SPY fire or whatever. Just comment something. I want to see you guys get fired up. So trade SPY options. Actually, I want to show you my history. All right. I want to be transparent about my history on SPY. So I want to show you what recently had happened, because right now I am trading some zero DT options on SPY. So right here, you'll see that I've been doing daily actually. So let me show you what this looks like. So that's 2023. Let's go to 20. Actually, I just started. I was actually doing this on QQQ. I'll actually show you both in this video. So SPY. So sell SPY 499 put option. I collected $494 on April 18. And then as soon as this expired, I just waited a little bit. And then I sold for $646. But you can actually make this a daily income strategy. I'm going to actually show you what that looks like on QQQ. Like I said, QQQ and SPY, they're essentially the same thing. So whether you trade one or the other, it's really not that big of a deal. So here's my QQQ. I've traded it so many days in a row where I was consistently profitable. So if I go to show more, you can see here how I ended up doing, there's a lot of trades. So just pay attention here. Promise you this is going to be totally worth it. Back on March 6th, I sold a put and made 162. I sold another put on the 11th, made 575. Then I sold some more puts, made 4,845, 1180, 780, 1145, 620, 780, 780. And then I did end up having a small loss of, I got assigned here at 431, and then I ended up selling the stock at 430.83. So I lost $17. So I lost about almost $300, but that doesn't matter. 780, 780, 620. This is my consistent daily income strategy. Basically, here's what I do. This is the most interesting thing. When the market opens up, it's unlikely to fall 1% after 10 a.m. Okay? Listen to that one more time. After 10 a.m., if the market is up 1%, it's unlikely to end the day at flat. If it's down 1%, it's unlikely to end the day at negative 2%. If it's down 2%, it's unlikely to end at negative 3%. At 10 a.m. is the most important inflection point, because the first 30 minutes of trading in the option market or just in the general stock market as a whole is the most volatile. So after the first 30 minutes, you get a really good sense of where the market direction is after that point. So once 10 a.m. hits, you can just sell a put option that is about 1% out of the money. So let me show you what that looks like. So if I were to go to SPY right now and I were to go to trade SPY options, this would be my zero DTE strategy. I would go to sell put option. Okay. Now I would just sell a put option that is 1% down. What is 1% of 507? Well, it's $5.07. Okay. So I would just basically go down by $5. That means that would be about 502. So if I look at 502 right now, yes, this is not a big return. However, this is like the most safest return ever, because I will just do this on an every single day basis. There's a little bit of a caveat, and I typically only cover this in my Discord community, but you can actually use margin to collect free income on SPY. It's a little bit more advanced. Don't worry about it. But I would sell options here, whether it's using margin for free, the way I do it, or just basically selling it every single day for a daily income. So if I were to sell 10 contracts here, this would be $350 per day. Now, yes, you need a large amount of money, which is why the next strategy I want to talk about is going to be a different income strategy in SPY, which uses a smaller amount of money. So I would go for something like 1 week out. For example, SPY has the best expiration days. They're basically every single day. So I would go for something that is 1 week out, and then I would just go for something out of the money. Again, we can go for 500. We can go a little bit lower. Here in this example, the delta is 0.31, which is a little bit high, to be honest with you. So maybe I would go a little bit lower. I will go to, like, let's say 498, okay? Still a pretty high delta, but at the same time, it's SPY. It's the most safest ETF to trade. So I would do this 25 delta. I would basically sell a put option. Okay, I'm going to sell this put option right here. And then I'm going to buy another put option. Okay, this is going to be called a put credit spread. So I'm going to go for 498. I'm going to go down to 495. So I'm going to open up this position right here. You can see that the max profit here is $43 and I'm only risking $257. So look, 43 over 250. That's basically a 16% return. I know that because 4 times 250 is 1,000. 4 times 443 is about 172. So it's actually a 17% return. You're getting 17% in 7 days. 7 days, 17%. Amazing, 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 amazing. Granted, you don't want to put your whole portfolio into this. This is a position where you would put 5 to 10% of your money, okay? So putting 5 to 10% of your money here, easy play. Easy money. This is the second strategy that I would use to profitably make money on SPY. Now, the next strategy that I would use, okay, would be very, very simple actually. You can actually buy call options on SPY as well. Now, you guys know I'm not the biggest call option buyer. However, I would just simply buy some leap options on SPY. So for me, I would pick a leap option that would be, probably between 6 months to 12 months. Okay. I want to give SPY some time to actually rise in value. So I would pick something like, let's say we're going to go to the end of the year, so end of 2024. We're going to go to end of 2024 and just buy a call option. Now, I would buy a call option that would probably be a little bit in the money because the whole point of doing this strategy is I don't want to buy 100 shares of SPY. That's $50,000. You may not have $50,000 laying around. So instead, what you can do is you can put a very small fraction of that. For example, you can go for an at the money option right here. Instead of buying SPY for 50 grand. Does that make sense? Why would you pay 50 grand for SPY? If you have a big portfolio, it may make sense. If you have a medium-sized portfolio or a small portfolio, it does not make any sense. So what I would do instead is I would just buy a call option. Now, I'd buy a call option. I would spend 3.5K. Boom. I would wait it out. I would just wait it out until December. And I would wait for the stock, the ETF to rise. And here, the break even is 539. SPY can easily go to 539. It can go to 550. It can go to 560. And by the way, you do not have to hold this option until expiration. You do not have to. My approach to SPY would just be to hold this option position 1 month to 5 or 6 months, because as you hold the option until expiration, time decay does kick in, okay? The theta will kick in and it'll start to lose some of its value a little bit faster. So in the first 1 to 3 months, it's not gonna lose any value. Honestly, the theta here is gonna be extremely, extremely low. So you can see here the theta is 0.09, which is actually not that low. That's actually $9 a day. So what theta means is the daily decay of the option. So right here, the $9 theta is $9 per day. But this ETF can move easily by multiple dollars, which would be multiple hundreds of dollars. So you're spending $9 essentially to rent out this call option. You're basically renting a call option. But if SPY goes up, then you are making hundreds of dollars. So as long as it is bullish and it's a good year, you're going to make a lot more money by buying a call option versus just owning shares. Now, the next thing that I do want to show you with SPY is another strategy that is going to be called the bull call spread. Okay, this is also referred to as a debit call spread. It's basically where you are buying a call option, then you're selling another call option to subsidize and make buying a call option a lot cheaper. Okay, so let's actually make this a lot cheaper by, for example, let's buy a call option for August 16. Okay, so we're gonna buy something. Let's say we're pretty bullish. We think it's gonna go just up to 520. So we're moderately bullish. Okay, we're not super bullish. We're not bearish. we're not neutral, we're moderately bullish, okay? Which is, by the way, the best strategy for SPY because SPY typically moves up 10% per year, okay? On average, the stock market makes between 8 to 12% per year. So if SPY just moves up a few percentage points from here till 2024, right? Until the end, okay? Or even in the next 2-3 months, this option expires in 4 months. So if it goes up 2 or 3%, here's what you would do. You would essentially want to buy a 515 call option, okay? This is kind of expensive. It's $1,500 for 4 months, okay? But now you can go ahead and sell a call option and, basically make this a lot cheaper, a lot cheaper, okay? So you can go from $15 and then now you're selling a $12 call option. Now this is only going to cost you about $264. And the benefit is you basically can double your money. So if SPY goes to 520, which is not really that big of a move, you will double your money in this example. Now, I would hold this position until expiration, unless in the last week we're not even close, then you would cut this and take a loss. So this is a kind of risky position because you're going to only win about 45% of the time. But if you do win, you're going to double your money. So the math actually doesn't make a lot of sense. The only way this makes sense is if you're personally bullish. But at the same time, these thetas, these deltas, these thetas, these Greeks are not always correct. So it says there's about a 43% chance of this happening. But if you logically think about the market moving up, it's more likely than 43% to move up on a long-term basis. If you do research, again, the market goes up 10%. So because we're almost halfway through 2024, in 6 months, it's going to move up by about 5%. That's the best guess. Promise you, that is the best guess. You can talk to many people. It's going to go down. It's going to go up. Who's right? Nobody knows. If you were to actually take an average, halfway mark of a year, what's going to happen for the end of the year in 6 more months is going to go up about 5%. That would be the most logical guess in any given year. So look, some lessons learned about SPY is there's many strategies that you can trade on SPY, whether it's a bull call spread, whether it's just selling puts or even covered calls. By the way, a sell put and a covered call is very similar. It's basically the same thing because you're putting up about the same amount of capital. You're collecting about the same amount of income. So whether you sell a put on SPY, which by the way, the benefit is you get to buy SPY a little bit cheaper, or if you're doing a covered call, which is, going to have to buy 100 shares, ties up a lot of capital, but then you also get income. Both really good strategies. Zero DTE is good. Bull call spreads are good. And one thing I didn't talk about is put credit spreads. But if you want a full video on put credit spreads, then check out this video right here on the screen right now.